Let's look at the Dow component. Home Depot just for reporting earnings came in at $2.08 a share compared to consensus of $2.27. Revenue and comp store sales did beat forecasts. However, Home Depot also suspended its 2020 outlook due to uncertainty stemming from the COVID-19 pandemic. Joining us with instant reaction to the results, Brian Nagel, analyst at Oppenheimer. I saw a couple of same-store numbers. What was the estimate for same-store sales in the U.S. and what'd they do, Brian?
Hey, Joe. So, look, the street estimate was like a 4.5, and they domestically did it at 7.5. So same-store sales numbers were quite good here for Home Depot. And I think the other comment on that, I was just reading through the press release quickly, they commented that the end of Q1, then early Q2 was also strong. So definitely a good sales quarter for Home Depot.
The outlook being suspended, not a surprise for you, Brian? And how do you see the outlook in the stock, as you can see, down 3.5% now on this?
Yeah, Home Depot suspending their outlook's not a surprise at all. We've seen company after company doing this. I think it's a smart move for Home Depot to do that. As far as my outlook, and I've written a lot about this for our clients, look, I think Home Depot is one of the companies that is benefiting or really capitalizing, performing well through this COVID-19 crisis, and is likely to perform well as the crisis headwinds abate. More people are spending more time in their homes, and you're seeing that increased spend as people spend more time and working on their houses.
Where was the shortfall? I mean, are we including? They're trying to do things for employees, obviously, expanded benefits. And $1.50, or no, that's actually the dividend, 60 cents a share expenses to support employees. Would that cause you to say results were below expectations? You can see the Dow is responding to Home Depot being down quite a bit. We're now down triple digits and then some on the Dow.
I don't think so. Again, this is one of those situations where I think as the dust clears, the market will look more favorably upon these results. So they called out was $850 million of extra expenses, basically to position their stores, to help their employees through this. Again, right thing to do. We didn't know that number, but I think conceptually we knew that would happen. Okay, so that's, to me, that in of itself is not a negative. So if I look at this quarter, she had a headline EPS of, I guess it was 208. I would add that 60 cents back in. You're doing 268, which significant. Again, that's not apples to apples, but that was significantly better than the street forecast.
What can you tell us about Lowe's similar expectations? It's going to be they're pretty similar with what happens. It's kind of a macro effect on both of the home improvement chains, right?
I think so. Look, over the last several weeks, I've spent a lot of time looking at Home Depot and Lowe's stores here in the New York area. They're crowded. They're both crowded. So I think in both cases, consumers are shopping the stores. What we typically see, and we'll get confirmation of this tomorrow, but typically Home Depot performs better than Lowe's in these type of situations. So if Home Depot is doing a 7.5, Lowe's is probably more 5%. Just a quick guess.
If we are looking for a business or a stock chart that does look something like a V, you think we can see it with these guys? It's kind of a sharp left side of a V, and then kind of a less, not quite as much of an incline on the other side, but it is a V, kind of.
Look, I think so. I mean, as of, I was just running these prices. So as of since Friday, Home Depot was more than 50% off of its bottom in March, up 6% for the year. So there's been a nice rebound in the stock. And again, I think that's the market realizing that Home Depot is performing well through this crisis.